I get it on the platform. I get it on Twitter. Oh, please, we need words of encouragement. We need help. I'm like, Bitcoin's at 100,000 or 98 or 96,000. You need help? I think you've got bigger problems in your crypto portfolio. I think you need a psychiatrist, a psychoanalyst, and I don't know what else. I'm not sure I can help you. We told you crypto is volatile. And with the volatility comes great returns. And it's choppy and sloppy. I've given you the rules of how not to fuck this up. I've given you the merch. Go to the merch store, buy the fuck this up, because it's the only way you fuckers are actually going to figure out how not to do this. Bitcoin, I mean, if the ISM goes up to 60, where it should be going, I mean, we're talking Bitcoin in the 250, 350, whatever thousand level. We ain't even started.
Raoul Pal highlights that many investors have a misunderstanding of market cycles and eliminates popular myths concerning cryptocurrencies. According to Pal, capital will naturally move from Bitcoin to altcoins when ISM heats up, defying the notion that alt season is over because of an excess of tokens or ETF inflows. He anticipates that this pattern will recur this cycle as it has in the past. One of his most convincing observations relates changes in the price of Bitcoin to the expansion of global M2. He notes that Bitcoin always sees a breakout once global liquidity rises. Raoul Pal boldly forecasts that Bitcoin might reach between $250,000 and $350,000 throughout this cycle, given that global M2 is expected to surge once more. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you, and enjoy the video.
Let's talk about the business cycle. It's the important part. The business cycle. I've talked about this a lot. If you can simplify everything at this point in the cycle, it's about the dollar. When the dollar weakens, liquidity conditions will increase and the world will be a better place and your bags will go up. Whatever bags you hold, literally anything. And so what we are doing is repeating the Trump cycle from 2017. Trump came in, the dollar had been going up. Everyone was freaking out about tariffs. They're inflationary. Rates have been going up. Trump comes in, says, I want a weaker dollar, and rates went down all the way through, even though the Fed were raising rates. We're seeing the same thing today. It's mirroring it. The dollar will weaken. It's very important the dollar weakens because the dollar is the liquidity provision for the entire system. And it's the dollar that drives global M2 that you guys know about. Global M2 is following the exact pattern. And I've gone through these charts before, but you guys have memories of a goldfish or you just panic and forget everything I've ever told you. Global M2, last time, this time, same pattern. That is the same pattern as the dollar. It should all play out the same way. Global M2 is a good proxy for global liquidity, which means number go up. The other thing that people get very confused about is they're like, well, what happens if the Fed don't cut much more? I don't care. What happens if rates don't go down a lot? I don't care. What happens if they don't drain the Treasury General account? I don't care. You've got to understand the global picture is the big picture. And the global picture, like 2017, will most likely be driven by China. I think the US will stimulate, but China is the big one. Chinese bond yields are now at 1% or somewhere close to it. They have run out of runway. And what does running out of runway? Jay Powell told you today, running out of runway, i.e. no rates to cut, means QE, baby, and more cowbell. The Chinese have I think when I looked at the calculation in my Excel, I think I got to, they need a ton of QE to do. So yeah, I think the calculation was a ton. They have to print money like crazy. Why? They have an aging population, massive debts. They need to service their debts. Everybody's in the same boat. This, my friends, is the everything code. I've bleated on forever about it. You kind of half get it. It's the fact that the only way of servicing the debts is to debase the currency, and the Chinese will do a lot of debasing. However, they can't do it until Trump beats them over the head with the strong dollar, which is happening today, and saying, you will agree our tariffs, which is happening right now. And when they agree the tariffs, he will say, I'll give you the carrot after the stick. The carrot is a weaker dollar. He did that in 2017. He will do it again now. The weaker dollar plus the lack of spending from Doge, i.e. the lowering of spending, will mean that rates come down as well. And what we get is the banana zone, the next phase. It is all to play for. There is nothing else going on. There is nothing to panic about. There is nothing wrong. It is all a piece of beauty. Global M2, every time we get to this point. It comes, it breaks out, it retests, it goes higher. We're exactly at the right point where this should happen again. Next phase, global M2 going up, the weaker dollar. There's global M2 and Bitcoin. Oh my God, I hear you say, because I hear you all the time. Oh my God, oh my God, oh my God. Panic, panic, panic. Is it going to 70,000? Are we all going to die? What am I going to do? No, no, no. In 2017, it went down 28% in 5 days, and then it kind of sideways chopped and then rallied. It will decouple from this chart going forwards from here. That I will give a high probability, 70% probability. The low is in, it will decouple, and eventually it will go.
Raoul Pal finds it annoying when investors lose their cool over transient market fluctuations. According to him, volatility is a common occurrence in cryptocurrency markets and is not to be worried. Raoul advises investors to put less emphasis on day-to-day price fluctuations and more on long-term macro trends and the liquidity cycle as a whole. He also notes that incorrect asset allocation is a common mistake made by investors. Pal suggests careful risk management and investment diversification. Altcoins shouldn't make up a large portion of your portfolio, despite the fact that they can be very volatile. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
The next phase will be alt season. I hear all of the on Twitter. Alt seasons is cancelled. There's too many tokens. It's never going to happen. Everything's changed. The ETF. And la, 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 la. Not true. It will happen. It may not take your bags higher, but that's because you're a shitty asset allocator and you need to do better job. So, we've all got our failures. I mean, I've got a few things in my wallet that are down enormously, and I pretend that I don't see them because they're only in my small bag, which was like less than 5% in mine, so I don't really care. Global M2 versus Bitcoin. Every time it breaks out, Bitcoin breaks higher, obviously. So we've talked about that before. We've done that chart. We're on that chart. The business cycle is picking up. New orders are screaming higher. The business cycle is the driver of global earnings. Global earnings get recycled into risk. Recycling into risk means risk assets like small cap stocks, through to commodities, through to alts in crypto go higher. The business cycle has only just started. A number above 50 for the ISM is expansion of the business cycle. We've just had our first print since God knows when of this going on the upside through 50. The last time was 2020. So we've got the cycle to play out. We are nowhere near the peak in the cycle, which I'll come to in a sec. New orders, less inventories. This is a 3-month lead, screaming even higher. The business cycle is going to pick up fast. And financial conditions, the dollar, oil, rates, they say, well, it should go to at least 55.6, but that would be low for the ISM. Because guess what? We think the dollar goes lower, rates go lower, and oil goes lower. So that should push this up into the 60s, which extends the cycle further. So we're at least 9 months away from a cycle peak. So it is very interesting where we are. It is all very positive. When we look at the overbought, oversold indicator of where we are in the cycle with crypto, we're nowhere near overbought. We're just starting. Bitcoin, every time the ISM peaks, Bitcoin peaks. When the ISM breaks 50, Bitcoin accelerates. We are at the acceleration phase, not the peaking phase. Anybody who tells you otherwise is a fucking moron. So we're at the acceleration phase. We've got liquidity coming. The ISM is not going to peak until the end of the year, maybe even into 2026. There is nothing, literally nothing to concern yourself. Here's the ISM and a kind of detrended, some fancy thing that Julian does with this, gives you a pricing model of Bitcoin. I mean, if the ISM goes up to 60, where it should be going, I mean, we're talking Bitcoin in the 250, 350, whatever thousand level. We ain't even started. Oh, and altcoins will outperform Bitcoin. Here's altcoins percentage of total market cap. Now, I've shown you this chart maybe 58 billion times, and you forget it every time. I don't know what drugs you guys are taking, but maybe a little less, so to increase your memory bandwidth would be somewhat helpful to me, because it's tiring to show you the same chart and you forget it every second. So what we have here is altcoins as a percentage of Bitcoin total market cap. As ISM goes up, people go out the risk curve. Basically, We've just crossed 50 in the ISM. That doesn't mean instant alt season right now. Give me my alts. Where's banana zone? Banana zone's not happening. The banana zone's failed. You've slipped on the banana skin. It takes time. It'll all play out. As the ISM accelerates, altcoins will accelerate. And it'll give you a basis of the understanding of the stuff that I talk about, the alpha that I'm trying to give, so you really understand, A, how to make your future, and B, how not to get scared in the stupid, boring, sideways market. The amount of fucking noise from you people, I get it on the platform, I get it on Twitter. Oh, please, we need words of encouragement. We need help. I'm like, Bitcoin's at 100,000 or 98 or 96,000. You need help? I think you've got bigger problems than your crypto portfolio. I think you need a psychiatrist, a psychoanalyst, and I don't know what else. I'm not sure I can help you. We told you crypto is volatile. And with the volatility comes great returns. And it's choppy and sloppy. I've given you the rules of how not to fuck this up. I've given you the merch. Go to the merch store, buy the fuck this up, because it's the only way you fuckers are actually going to figure out how not to do this, or how not to crap your pants every time the market goes down 5%. It's just that crapping of pantage stuff that goes on is so unnecessary.
Raoul Pal makes a strong point on managing cryptocurrency volatility and comprehending market cycles. He stresses that brief fluctuations in the market are common and shouldn't trigger panic. Investors should instead concentrate on the wider picture, especially the business and liquidity cycles. Pal asserts that as the ISM keeps rising, there is substantial upside potential for Bitcoin and other cryptocurrencies, and that we are currently in the acceleration phase rather than the peak. Pal emphasizes that Bitcoin has a history of rising as global liquidity increases. As the ISM rises and capital flows into riskier assets like cryptocurrencies, he anticipates that Bitcoin will hit $250,000 to $350,000. Additionally, he emphasizes that if investors move farther out on the risk curve, altcoins will perform better than Bitcoin. He does, however, caution against wasting assets, warning viewers that altcoins are erratic and shouldn't control a portfolio. Pal concludes by advising investors to maintain composure and refrain from emotional outbursts. Although cryptocurrency is inherently volatile, opportunity also arises from this volatility. Investors now need to maintain concentration and play the long game, since he has given them the tools, tactics, and mindset they need to succeed in this market. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.